Guys, yep. Good evening, all. Thank you for coming. So it's a it's a first pitch day of Afford Capital on English. I'm very glad to see you all. Thank you for coming. So today, just okay. I need a presentation first. Just 1 minute. Sorry. Okay.
All technical difficulties with the English pitch days.
Everything is done. I mean, do you see the presentation?
Yep.
Yeah, okay, nice. Okay, guys, welcome to Afford.Capital Pitch Day. My name is Sergei Kovalev. I'm so excited that you come here to see what kind of startups and to hear what kind of startups they come in today. I'm very sorry before I start that my English is maybe a little bit worse, but I try to do my best. So let's start. Today we have the pitch day. It's an online event where founders pitch their startups and they have the unique opportunity to ask them the questions. So what is agenda? Today we have a small presentation, like 5 till 7 minutes of Afford. Then a brief presentation of today's project. So then startups founder will present their pitch their project and will answer the questions. And Afford Capital provide early stage allocation and opportunity to invest in great startup project that we have today. So it takes 1.5 hours to listen us. So keep in touch and keep move forward. I'm a founder of Afford Capital, and my name is Sergei Kovalev. I'm the innovative entrepreneur and investment in blockchain, Web3, biotech, and AI sectors. So the main focus today of startups acceleration and fundraising and selling company for and M&A deals. So if we're talking about my previous traction, so I started living in South Asia from 2011, and from 2016 I started to develop the crypto. So I was met with my future business partner. His name is Sergei Sergeyenko. Maybe you know him. So we are doing nearly the first ICOs in the world, which called Hrona Bank. And after the Hrona Bank, we're doing the big marketing company, which doing marketing and fundraising for startups around the world. So since 2017 till 2019, we attract more than nearly 1 billion of US dollars to more than 30 startups. So what we are doing now, we also have our own project which called Hrona.tech. It's ecosystem of HR. So we have the biggest HR solution in the world, which called laborx.com. It's more than 100,000 people doing deals there. So other one, we have crypto exchange, which called Timex, and it's based in Australia. So my partner is also live in Australia for 25 years. And in the last year, we on the when the play to earn start like a hype, so we're doing our own game guild. Its name is CGU, Crypto Gaming United.io. So it's about 150,000 people register and more than 20,000 users live every day. So we attract more than 30 million for this project, and also our backers is Hobby Ventures and Binance Labs. So Afford.Capital, we start doing just 1 year, 1 year and 2 months, 2.5 months ago. So the problem that we have the money, but we don't know. We need to know how to invest and how we can select our project and make our investment and grow it. So that's why we created Afford.Capital, which a little bit numbers. So we invest in 11 sectors, and through so from 2017, it's about 5 years, we review more than 6,000 startups. So now we have the 6 projects with 1 billion plus capitalization. So we have our own scoring system, which contain more than 30 plus parameters, and we track investment flow more than 96.5 million US. So what is our mission? What we are doing? Our mission is to accelerate and support the technology development of fuel making, and creating the investment in a project that shapes the world in the future. So here is 11 case areas that we invest in. You can see it after the presentation. So today, Afford.Capital portfolio project are welcome in a few projects. It's 4. It's Eywa, it's Revelator, Acquire.Fi, and Una. So what I want to let you know, we are closely working with top 6 investment fund like Binance Labs and big brand holdings, Hobby Ventures, and let's see, another one. So we are making the friends deals with them, and it's also help us to get the good projects on our pipeline. And today so if we are talking about the startups, so startups pitching today has been carefully selected, and all the startups is past our scoring system. That's why we are thinking that the next unicorn. Scoring system of blockchain startups in Afford.Capital consists of 3 steps. So it's first step is project team fields and application through the scoring system model. So the second step is run fundamental analysis as a small things. So the third step, our security team runs a check. It's about, like a filter of scam, pyramids, or other stuff. So what is the benefits of scoring? First, it's minimize the risk for investors. So it's for you. We try to improve quality and diffraction of projects present. So, and we also saved your time and resources for research. We have the fund structure. So we have our fund is DAO fund, and now we are making the deal by deal investment. So it's Afford.Capital consists of here's like 8 sectors. Like first is a business development, investor support, tokenomist, trend watcher, PR service and scouting blockchain, startups, and financial. So we fully let's say cover all kinds of business that all startups have. And when we will finish our pitch day, so you take away from our meeting the investors guide, so and the startups guide for perfect pitch deck. It's more that's for the startups. And let's say let's first speech day for English people start, and I will pass the microphone to the founder of our project. The first it will be Eywa, I think. Yeah, Eywa or no?
I think it's Revelator, Sergei.
Okay, Dennis. Let's. It will be Revelator.
Guys, we had a bit of a time change. They asked to go first, so thanks a lot for arranging Revelator to go first. Yeah, Dennis, go ahead.
All right.
I think Bruno will.
Sergei, yeah, please introduce Bruno and let's get it.
Bruno is an incredible person who thinking about the future of the music IP rights. When we met the first time, I think he's a little bit crazy, but when I see his project for review, it's 100% the future that we're gonna get on board. So that's why he is here. Bruno, go ahead, please.
Yep, Bruno, we're ready. Can you hear us? Is your mic on?
Great. Can you hear me now?
Yes, we can hear you now. Go ahead, Bruno.
Great.
Oh, we can see you now also.
Great. I just wanted to say thank you for having me here. It's an honor, and I'm looking forward to the opportunity of presenting Revelator to you today. So as Sergei said, my name is Bruno Ghez. I'm the CEO and founder of Revelator. We're basically trying to power the next evolution of the music industry and bringing a lot of the music assets and the rights related to those assets onto the blockchain. I started 27 years ago running a record label called Quango, which was signed to Island Records, which is part of Universal. I worked as a creative director for Cirque du Soleil for many years, and I was on the board of directors for Merlin, which is the largest independent music association representing the rights of all the independent record labels around the world. And I started Revelator about a decade ago, and we went to market in 2015. And we've been, in the market selling to music distributors, record labels, artist managers. So I look at this, vision of what we're doing as really defining that the future of music really will belong to everyone. And when I say everyone, I mean not just the creators, but also the fans and potentially the investors as well. And part of our mission is to modernize a very slow music industry. And we've become a really strong music, platform serving the rights of, artists and businesses around the world. We've been developing a blockchain-based protocol called Original Works to bring even more transparency and liquidity to the music market. And part of what we do is the tokenization of music. So we'll take a song and turn it into a smart contract and allow that smart contract to have the revenue flow so people understand the value of those assets. So we provide a turnkey solution to on-ramp the music industry to Web3 without anyone having any knowledge of crypto or coding. And part of our advantage, I believe, is the Web2 interface, where it's really easy to understand, how to interact with Web3 protocols without necessarily knowing anything about Web3 protocols. So I kind of look at Revelator as a leading music technology company that bridges traditional music IP and digital assets into one trusted platform. When we look at the music industry, we're dealing with about $40 billion today, growing to about $137 billion by 2030, according to Goldman Sachs. Just the NFT portion of the digital assets last year generated about $44 billion. And we look at the marketplace value of music catalogs exceeding over $2 trillion. Part of the problem today is that music assets are not on-chain, so they're off-chain, they're not well monetized, and they're illiquid. So part of our solution is to bring music assets on-chain and make them, more liquid. Today, the creators lack the tools to monetize IP and build community around their assets. The fans do not have any access to participate or create or capture value in music IP. And while investors are looking forward to having, music as an asset class, it's not really democratized, or not a lot of people have access to, being able to invest in music assets. Mostly it's private transactions. So, we see more and more digital securities marketplaces, becoming part of the future. We're already in discussion, with one that will launch at the end of this year, that are already an investor in this round. And we will use the protocol as a way to get music assets to a digital securities marketplace. So what we do is, we connect all the music industry, a revenue flow, into the blockchain, and, start to create more liquidity for music assets. So we tokenize the music IP. And I really see that as the solution to creating a more efficient marketplace. The protocol itself is built around tokenization. So you have smart contracts. We've built an amazing creator digital wallet. We pay royalties and stable, and we provide a financing, what we call micro lending, against the revenue stream, and allow the IP assets to be, interoperating with DeFi protocols. And we're about to launch our NFT market and NFT storefront infrastructure as part of the Revelator platform. So basically, rights owners are able to mint digital assets, issue tokens, create smart contracts, and pay everyone in the income participation of the IP, and be able to collect on-chain royalties in stablecoins. It's a full stack architecture, so we have both Web 2 and Web 3, applications that are sitting on top of our protocol. And we can deal with different types of assets. Obviously, we're starting with music assets and video. Video is as much music today. And that sits on top of our Revelator platform that deals with the asset management, the reporting, the analytics, the rights and royalties and payments. Then we have our Web3 applications, the digital wallet, and our studio. And that lives on top of the protocol. And it's a multi-chain protocol. So we can work on Binance or Polygon or Ethereum currently. So we provide a unified ecosystem to seamlessly bridge, Web 2 and Web 3. It's one platform, it's enterprise grade. It gives everyone access to Web 3 and provides real-time payments. So the platform as an IP platform is built around, managing assets, managing contracts, managing all the revenue coming from the streaming platforms, and being able to kind of understand it, analyze it, and generate royalties so everyone gets paid. We also have a data infrastructure and a data warehousing so that we can actually do business intelligence on top of this streaming data and understand the value of the song on a daily basis, understand how many people are listening, and how much, the song is going to make when the contract pays out. So we're able to bridge the funding gap between the time the song plays and the contract pays out. In terms of the digital assets, we allow people to easily create digital assets and create smart contracts. So it's really easy to mint, to license, to list, and to manage all the digital and on-chain revenue, whether it's a fungible or non-fungible asset. It provides a really easy to use interface to manage digital assets. We also provide non-custodial key management. So if people that are customers using the platform don't need to know anything about wallets. We use Amazon KMS as a way to secure the private keys and rotate those private keys. So we can provide a non-custodial solution that is secure in a Web2 interface. We also provide a non-custodial wallet as well. So we help people create wallets that they control. We don't control the keys. We also have smart contracts to split the money. So when you have different participants in an IP, whether it's the artist or the investors or the fans, it makes it really easy to have money flow into the smart contract and to split the money on chain. So we can deal with revenue sharing on chain across all the income participants directly to their wallets. We provide a simple interface to do all the financial reporting for all the streaming royalties from Web2, as well as Web3 native royalties from NFTs or income that are coming into the smart contract. One of our advantages is that we bring both Web2 and Web3 financial transactions in one place to make it really simple for businesses to understand how to manage both their fiat business as well as their crypto business. On the digital wallet side, we're creating basically the tools for the artists to engage their fans, to engage their communities, and provide content, NFTs, vaults, and exclusive digital experiences for them to be able to create more of a peer-to-peer community around their music. And a lot of it is around building membership and building the community around your artist brand. So we also provide the wallet so they can get paid directly in royalties collected directly to their wallet. When we pay a smart contract, the artist receives the money directly into their phone, and they can see exactly how much money they're receiving. They can also borrow money against future royalties. The project that we're launching at the end of this month is all about building NFT storefronts, so anyone can mint an NFT and list it and create their own storefront where they can sell it directly to their fan base. So we've been at this for some time. A lot of us in the company come from the music industry or the blockchain space. There's 52 people in the company. We do about 2.5 to 2.8 million in revenue this year. And I think we will double that next year as we have a lot of our Web3 revenue streams starting to monetize for the platform, as well as our SaaS subscription business and revenue share. We've processed over $100 million of royalties on the platform. We process over 3 billion streams a month. We have about 115 B2B customers that power about 250,000 artists through all of our customers. So the team is between Israel and Eastern Europe, Bulgaria, Poland, Ukraine, as well as Barcelona. That's it. I'm happy to answer any questions.
Thank you, Bruno.
Yeah, guys, don't be shy. Bruno, thanks a lot for the presentation. Does anyone have any questions?
Hey, Bruno, this is Michael here from Hong Kong. Just a quick question. How do you go against copyright infringements if you realize that some of the music is being stolen and reproduced and distributed in places where it shouldn't be?
It's a very good question. This is something that happens across the whole industry. So it's not only specific to us as a distributor, but we have pretty sophisticated infrastructure for fraud monitoring. There's 3 types of fraud. There's a copyright infringement where someone is uploading somebody else's music. There is what we call artificial streaming, where someone is using bot farms to artificially pump up the streams, where people are not really listening, but it's really, devices that are artificially playing songs. So it appears that there's 1 million streams when it's really not 1 million people listening. And the streaming platforms have become really sophisticated in detecting this. And the third type of fraud that we see is YouTube scams, where people are uploading music and they're putting it, with a video of maybe The Simpsons, and they're trying to monetize the royalties on the music. So, we have a whole operations team that deals with this. We see most fraud coming from Vietnam, India, and China. The West doesn't have nearly as much fraud compared to what's happening in the emerging markets like India and Vietnam. So we're aware and we kind of pay attention. Having the data analytics really gives you visibility into understanding, if you see that something is getting 1 million streams a day consistently, that something is kind of weird, but we take action. We take down content, we talk to our customers, they talk to their artists, they make sure that, they're not being fraudulent. The other thing we do is we have content identification within the platform. We use ACR Cloud, which is a Hong Kong-based company, to actually detect if a song, is Michael Jackson's or, Billie Eilish. And we, even before we distribute music, we can actually see, whose music is being distributed.
Cool, thanks a lot.
Any more questions, guys?
Maybe one more question, if nobody has another question. I saw you have quite some good backers, if I remember correctly. DCG is one of them, and I'm just wondering, what are you actually looking for now? Is it more funding? Is it more partners? Is it talent? How can VC funds help you these days?
Sure. So Digital Currency Group is an investor, Dapper is an investor, and Republic is an investor in this round as well. I think what we're raising a $5 million round currently at a pre-money valuation of 50 million. What we're looking for is both strategic on the music side, being able to kind of bring more artists, more celebrities, more talent, but as well on the Web3 and crypto side to help us kind of expand the network and launch the protocol, people that have interesting experience in that as well. I think Republic will do a great job with us on that, given that they're working on a digital securities marketplace that will allow us to kind of bring music IP to market in a compliant and regulated way. But I'm definitely open to opportunities to meet VCs and investors that are in the space, both on the music side and the Web3.
Thanks.
Also, Michael, if you need just intro to the Bruno or you have the question, just let us know so we can leave the request by the link in the chat, so we can connect you easily if you have some opportunity to help with not only with the money but with everything that that Bruno need. Just let us know, okay? So Bruno, thank you very much.
There's another question, guys. Another question in the chat. Sorry, Serge. I just saw it pop up. The question is, what is the reason for this unspoken rule, so to speak, in the music industry that the content makers only get their money after 180 days. Does that exist?
So it's a good question, and you hear a lot about artists getting the raw deal on contracts, but the music industry is really complex. Rights are very complex. There's two sides to the music industry. There's who wrote the song and who recorded the song. So we call that music publishing, or we call that recorded music. So on the recorded music side, artists actually get paid much faster than songwriters, believe it or not. Songwriters are usually the first one to create and the last one to get paid. The rights organizations are the ones collecting the money, from the moment a song plays on a streaming platform or on broadcast television and radio, etc. They're very, very slow at paying money to the songwriters and the publishers. The distributors and the labels have more tooling, so they're usually more equipped to make payments faster. What we see on the independent distribution is people can get paid as fast as 30 days. For the most part, it's usually every 60 or 90 days. Record labels used to do contracts where they would pay only twice a year, because when you had physical records going into record stores, which you don't have today anymore, but it would take a long time to get the accounting from all the record stores, and the record stores could return the music that was not sold. So record labels made contracts that would mean we pay out artists every twice a year, basically. With digital, it changes everything. Data is real time, so I believe that payments should be real time. That's what we're working to solve.
Thanks for the answer, Bruno. So that's the last question. Then we will move on to our next speaker now. Because it is quite late in Bali, and CEO of Acquire.Fi is there, I give him the next word just to save his startup gray hair and let him sleep a bit. They also have the project release very soon, so he needs that sleep for sure. Jan, would you like to go next, as you asked us originally?
Hey, for sure, and greetings from Bali. I won't put my camera on because of the internet here, but thank you, Sergei. Thank you, Konstantin, for having me here. Afford.Capital has been very helpful with connecting me to the right people, and overall, happy to be here.
Thanks, Jan.
Maybe I can share my screen if that's okay.
Absolutely.
All right, can you guys all see?
Yeah, beautiful.
Okay, perfect. So I can introduce myself a little bit more and then go in what we're building and what Acquire.Fi is. So my name is Jan. I've been in crypto from 2011. I built two very well-known companies. One of them was Paxful, was there for 4.5 years, scaled up to more than 4.5 million users, $2 billion in volume. Then I quit. Then I co-founded something called the Yield app. Was there for 2 years, scaled it up to more than $500 million assets under management. And then during my time at Yield app, I started getting a lot of different M&A offers. A lot of different traditional finance people came to me and asked for help. And 8 months ago, I quit and started building Acquire.Fi. And what is Acquire.Fi? Acquire.Fi is an ecosystem where basically people can invest in real-world assets. Founders can exit their Web3 companies, and VC, DAOs, and traditional companies can buy out these different Web3 companies and basically get a deal flow going. So in a nutshell, what we're building is a marketplace where people can list their Web3 companies. And then we have a crowdfunding element where we are basically doing crowdfunding for real world assets and fractionalizing them with the help of NFTs. As for last year, the M&A space in crypto has been very active. There were over $6 billion worth of deals last year, and this year it's actually been the same. It's definitely a buyer's market this year. Last year was more on the seller's market. On the venture funding side, last year was over $25 billion worth of venture funding. And some of that funding went to real world assets also. So the industry itself has been growing a lot, but there has been one problem. And especially at M&A for small, medium enterprises, or let's say companies that has been around for a while, they have nowhere to exit or list their company. So the problem has been in M&A that there's no open order book. And people that have been around for a while, that means that if there's no open order book, there's nowhere to exit because there's no liquidity. So basically what we're trying to build on the marketplace side is a marketplace where everything is open. You can list your company. It can be private or open. It doesn't really matter. And people can see details of your company and either buy it out or make some other kind of deal. And then on the crowdfunding part, there's been very hard, like it's very fractionalized, the niche itself, to invest in real world assets. There's a lot of different companies that are trying to do it. There's one company that is trying to put houses, for example, on chain. And there's some that are trying to put luxury cars on chain and so forth. But what we want to do, we want to bring that all in-house and everything on our marketplace. And that means that instead of having all of these different websites to go to for example, houses or something else, we want to be the number one that basically puts the assets on chain, and you can basically start diversifying your assets, what you have. So I talked about a little bit about the solutions already. So I think that's clear. How the investment pools and basically the crowdfunding element works is that we have different tiers. The more tokens you have, the bigger tier you have. That means the bigger allocation you have. And also whatever we make with the platform, we will basically buy out 30% of the profits, or whatever we make 30%, and buy it out and distribute it. And on the crowdfunding part, and what are we trying to do there is that, for example, if you want to buy a car, why should you buy it alone? Like the element of crowdfunding is giving a lot of opportunities to all the normal people out there that don't maybe have the money to buy a luxury car, or let's say a luxury watch or whatever. And that means that if we buy it together as a crowdfunding element and fractionalize it, there's actually diversification that you can do better. And that means that if you can diversify it, you can actually start building a very, very good portfolio against the market. And the more you can diversify your portfolio, the better, usually. About the team, we almost all have more than 5 years in this digital asset space. We have Harrison Fry, has been around from 2017. He ran one of the biggest, well, I would say very well-known marketing agencies. Brad Holland was the CMO of Coinberry, which is one of the biggest exchanges in Canada. And we have Ken Mack, who is the M&A specialist and helping out with our M&A deals. And he has more than 15 years of experience doing M&A. He's a well-known character also in social media and has more than 150,000 followers. About the tech team, we have Nas, and Nas has more than 10 people underneath him. Nas has been building from 2011, very well-known character. Some of you guys know him from Safunet, and some of you guys know him from some other projects, but he's been basically helping out a lot of different projects with their tech, and he's now full-time helping us. We have Marina. Marina has been doing legal work more than 14 years. She was actually making the legislation and helping the legislation in Switzerland, Hong Kong, and Singapore, and she's been doing M&A also. So that's good. We have Garrett and Anna, who is basically doing sales, and then marketing director that is helping out with social media. About the marketplace preview. So as Konstantin said, I have a launch in 20 days. So we've been collecting more than $2.2 million, and we've been building constantly. The prototype itself is starting to be more and more ready. We do have companies on sale already. If you guys want, after this call, I can send you a link. You can get a Telegram channel where you can join and see the full list what we have for sale. But this is how it looks like on the marketplace side. So you would see all the revenue, price, and what's the multiplier and so forth. And then on the crowdfunding part, it's kind of like Republic. Someone was mentioning Republic, but we are basically copying a lot of things that Republic was doing because they've done it so well. Same thing here. You can invest in different investment pools. This investment pool can be whatever we want. It can be a luxury car. It can be a luxury watch. It can be a house. Well, whatever there is, it can be put on chain. We use asset managers, third-party asset managers, to help us evaluate the companies and basically also do audits. How we earn is whatever gets sold on our marketplace, we get between 3 to 12%, depending on the deal size. On the investment pool side, whatever we raise, we get a 5% fee. And whatever we make with the ecosystem and marketplace, we will give 30% back to the community and basically buy out the token. What do we have now? We have everything from launch pads, even to layer ones, IPs, mining, whatever you can imagine. There's actually already probably listed on our place. We do have over 70 companies for sale. It's $70 million on the sell side, and we have 40 buyers at the moment. These are venture studios, hedge funds, VCs, and so forth. And then on the asset manager side, we have more than 5 different assets that we're going to put on chain, and we're going to do some crowdfunding on. What are the platform benefits? So first of all, we have very exclusive M&A opportunities. We are the only platform out there that does Web3 M&A. And that means that we're getting now between 2 to 3 different companies a week for sale. And we get a lot of different stuff. And we hope that on this call, we have more people here that either want to exit or buy out different things. On the crowdfunding part, we do have very exclusive asset managers that we work with. I can't name names because we have non-disclosure agreements with them, but we do have very exclusive items that we're going to put on chain and which you can basically own a fraction of. We do due diligence on almost, we are a centralized platform. So we do KYC, KYB, whatever we list, we have the same kind of system like Afford.Capital. You have to have certain amount of things in place before we list you. And after that, we will start pairing you with different buyers. Reward benefits, like I said, it's a reward based. We have 5 different tiers. The bigger tier you are, the more benefits you have. Eventually, we want to build a DAO, and that DAO would basically buy out these different companies that we see. And we see every deal before everyone else. And that means that we can source the best deals for this DAO eventually, and maybe flip them or just let them be and grow them. There's a lot of different growth opportunities, especially M&A, because there's no one else doing this. If you look at Web 2, there's 2 different companies doing this really well. One of them is Empire Flippers. They do around $100 to $200 million a year. And then you have Flippa that is doing almost $500 to $1 billion a year. And like I said before, last year was a record amount of M&A deals done in crypto. And I think this year is going to be almost the same. There's been some very big buyouts. And I think that this industry itself will just keep growing. And what is happening with Web 2 companies is that they want to come into Web 3, but they had last year one problem, and the problem was the valuations. The valuations were way too high for them to come in, but now when the valuation is getting lower, they're actually thinking about buying out different companies. And that makes actually sense if you think about it. Like, why can't you reuse code? Why can't you buy out the product market fit company right away instead of building it? And then on the investment pool side, crowdfunding part, there's a lot of different assets that are coming on chain. And if you are very, let's say, diversified investor, you can actually make very, very professional investment portfolios, which you couldn't do before. So there's endless amount of growth opportunities. And I think that the industry itself, despite the mirror market, it will come around and grow even faster and bigger. So we raised so far $2.2 million. We had all of our angels, seed and private one now filled. We're still looking for private two. And we have now public, we're going public on the 28th. We have 4 to 5 launch pads that we're in talks with, and 2 to 3 different exchanges. But we're still looking for basically partners that can help us either with deal flow and with connecting with the right people in the future, because I think we will do some equity rounds pretty soon. How we're distributing the funds, most of it is going to hiring and salaries and building the tech, and rest is basically going to marketing, liquidity, and legal. About the roadmap, so we're launching our first platform now on the 28th. It will be a closed beta, and once the closed beta is ready, we will start adding more people to it and basically launch it fully, I think next month. We will bring loans and lending to the ecosystem, because we think that there's a lot of startups that are actually profitable, and it's stupid as a founder sell equity if you can borrow. And I think that itself in the real world asset side will come to crypto. Like we're seeing already DAI making some moves with their borrowing and lending, and I think that will become a norm also here in the crypto space. And then later of the next year, we will do the DAO and start raising money for that. About our advisors, we have Wolf Kahl, been doing more than 100 academic paper. He's very well known in the space. He's been helping out formulating our DAO and understanding like what we can do with it and how we should basically distribute some of the things there. We have Coach JV. He's a well-known influencer, has more than 1 million subscribers in social media. And then we have Sander van Skak from Silicon Valley. He's been helping us a lot with different connections. And then we have Magnus Capital, who has been one of our main guys helping out with the race. And then we have David Cohen, that is from Hedera Hashgraph, and we have been exploring what we can do on that side. And then some of our partners. I think that's it. Thank you.
All right. Jan, thanks a lot for the presentation. Guys, do you have any questions?
Hey, no worries. If I didn't make sense, it's because I'm tired.
It definitely makes sense to me because we've spoken a few times before. But there's a few people here questions, so don't be shy, guys. Go ahead. It's a bit of a new concept, merging and acquisition in Web3. So I'm sure you have some things to ask.
Hey, Jan, I do have a question for you. So how it actually is like working all the things from a legal point of view? I mean, like this is like tokenization of the real assets and fractionalizing of this stuff. So can you like tell more details about this, legal side of all of this?
Yeah, for sure. So we have a crowdfunding license in Estonia and in Switzerland. Our target market first will be Europe. How we do it legally is basically we do a SPV. We fractionalize that SPV. We give out from that SPV equity, which becomes NFTs. So they are securities. But the beauty of this is that we have a mechanism we call staking. So you can stake your NFT, they become securities. If you unstake them, it becomes only metadata. If it's only metadata, you can actually start trading it on secondary market and building your own portfolios on the decentralized marketplaces. That's in a nutshell how we did it. We're working with partners all around the world. Our goal is to eventually be in the US, but that's a long-term goal. Let's see first. Our next goal is to be in Asia. And yeah, we are very excited what we've done so far and where we're going.
Yeah, thanks a lot. So you are more like focused on the Europe region as the starting point, right? So like my general question was how I can possess something like in Asian region, another country which I don't belong to, like, you know, because which kind of rights I will get for this, let's say property or luxury cars, something like this.
Yeah, so you will get equity rights, but no voting rights on the SPV.
Okay.
And the SPV itself will be between 1 to 5 years. We will not touch it. For example, if it's a luxury, let's say it's a luxury car, because they've been going up quite a lot. We will keep it in a safe house and don't touch it. And one of the reasons we have some fees on the raises that we do is because we need management fee.
Yeah, you need to keep a track on these assets, right?
Yes.
Okay.
But
cool.
the goal is that eventually, like wherever you are, you will have the possibility to basically participate and own different assets. And one of our first assets actually that we're putting on chain is a school that is producing quite significant, I would say significant amount of money. But yeah.
Okay, thanks a lot.
Guys, feel free to ask more questions. And if we got none, then the next speaker will proceed. Questions?
How much of the marketplace fees goes back to the holders of the token?
30%. So just to give you guys some examples. So let's say what we're seeing now is the average deal is between $250,000 up to $2 million. Then we have higher ticket deals. Let's say some of these deals we sell, we get 10%. The average what we get is 10%. So that would be 25K, 30K. And from that 30K, 30% would go to the ecosystem. That's just an example of one deal. Our competitors in Web2 are doing $150 to $200 million yearly in volume. And I think once we get traction more and more, and this marketplace itself grows and grows and grows, we will get a lot of deals. And we are very close of closing our first deals. So I'm very excited about that. And why do we have M&A marketplace and a crowdfunding platform? I think it's a very good system and very good ecosystem because you need basically two different revenue sources. So we're combining the institutional money, which is usually quite big, and then we're combining the, let's say, normal people's money, which is not that big, but you can do a lot with the money overall. Like we can invest in a lot of different things. And by the way, about the companies for sale, I put it in the chat. That's an open order book, what we have now. There's some closed deals also, unfortunately, still. But I hope you guys get a sense of what we have now and what we're getting. And there's also a Telegram channel that if you guys want to join, we post there every day a new deal. Thank you.
Thanks a lot, Jan. That was cool. So
Thank you.
Without further ado, if we have no more questions, let's move to the next guys. That will be Unofarm. Let's dive deeper into DeFi. That has been on a bit of a pause or a slowdown since the fun news with Anchor and Luna. But there are great guys like Uno still making progress in the field. You guys here, you're welcome to join and start.
Yeah, guys, can you hear me?
Yes, Alex, we can.
Cool. Let me share my screen. 1 second. Okay, nice. So can you see my screen now?
It's loading. Just give it a sec. Yep. Oh, gotta love your designs.
Yeah, thanks, mate. Yeah, so my name is Alex. I'm co-founder and CBDO of Unofarm. So Unofarm is DeFi yield aggregator. We are aiming to maximize the profits of our users to minimize their risk and of course to save their time on the DeFi yield aggregation market. So in general, our main goal is to create one unified single entry point into the whole DeFi yield aggregation opportunity. So Yeah, I'll start from our team. So we do have 3 co-founders, me, Michael, and Roman. Roman have like one of the greatest crypto experience. He is in the space from 2011. Michael have a lot of different entities and marketing agency for more than 150 employees back in the days. I came from the brokerage side, knowing to how the markets are operating. Our advisors, like you can recognize Sergei, he's the host and the leader of Afford.Capital. Faraj, who will be pitching after us with his project. He's one of the top figures in the Dubai ecosystem as well. So generally speaking, we do have more than 15 guys working full day on this project. And we have, started this again 9 or 10 months ago. It was our internal project for our own staking and farming needs. We were just, we wanted to create some kind of tool for ourselves to optimize the processes. So this is how we came up with this idea. And despite on what is going on with the DeFi market, with this 3 Arrow Capitals and other stuff going on, we do have a lot of faith in the DeFi market in general. Because with all due respect to other things, there can be some trends like, I don't know, NFT, GameFi, something like this, but we do have the majority of our expectations in the DeFi market, yield aggregation part in general, because we see that the market is evolving, is growing up rapidly. So it maybe will be more than $500 billion in 2028, and I guess it will be even more than that. So we see it have a lot of potential. That's why we put a lot of effort here. So I'll start from the point that there is a lot of different yield aggregators, and we know our competitors, and we know what gives us more advantage on this market and how we can outperform them. Like for instance, our main unique value proposition, what we are doing better than the others, and what is giving us the greatest tool to provide for our users. We call this feature auto strats. This is an auto switching for the highest yield. So this is the system which is automatically help you to, in all the market situations, to generate the best APY existing in the DeFi yield. So also we'll have now ecosystem and insurance pool, special inheritance mechanism. We want to create a very simplified user flow for our DeFi users, and then go and enlarge this database for the common investors via Fiat Gateway. We creating a cross-chain protocol, meaning that it's not working on different other chains, but they all will be connected in one big system. So what kind of problems are we solving here? So first of all, DeFi is quite vulnerable space. So we think a lot about security. And for instance, we want to integrate all the yield sources that are available in the system. We'll be choosing this yield sources carefully. We'll be monitoring them using our internal scorings, track records, and making some sort of smart contract security audits. Because sorry, I forgot to mention this in the beginning. Apart from the Unofarm, we do have a blockchain development company. It's called Mycelium Lab. So we have been doing blockchain and DeFi development solutions for the last couple of years. We gained a lot of expertise over here as well. Also, we'll have an anti-reg pool system which will prevent these transactions to happen. It will try to front run this shady transactions. The fair reward distribution mechanism designed and implemented by Roman. So it detects how much amount of liquidity spent, how much time this liquidity is spent between the reinvests in order to prevent some sort of attacks on it. An inheritance mechanism, which is actually some sort of liquidity transfer to the secondary wallet in case, if something happened to you, you lose access to your private keys or something happened to you personally, and this liquidity won't be stuck forever. It won't go away from the ecosystem. It will be transferred to your, wife's wallet, to your child's wallet, to your secondary wallet in some particular cases, and of course the insurance pool. So about time consumption and like different other barriers. Like DeFi is very, very hard to like understand. This is like top notch technology. So what we want to create Web3 technologies as simple as Web2 technologies. Like users don't need to know or think about like what the heck is LP token farming. They just need to click a few buttons and they will be providing their liquidity and earning their yields. Meaning there will be a lot of features like single asset entry in the pool, so fiat gateway that will help them to do this in our ecosystem. Of course, they will have an advanced portfolio analytics, which will help them to understand what is going on with the deposits, how they're growing. Maybe they need to do some rebalances and something like this. And apart from all of this, we are creating ready-to-use staking solution for the businesses because we see a lot of potential of TVL growth and protocol growth in the partnerships with some crypto entities. So this is very nice, but what we're doing like the best of all, like what is our unique value proposition? This is a feature called auto strats. So there is a problem on the DeFi yield aggregator market, and if you have been providing liquidity by yourself, you understand what I'm talking about. Like you never know what kind of APYs they will be tomorrow or the day after tomorrow. Like can be 5% today, 10% tomorrow, 1% then. So the idea is that you need to be inside the market every time. You need to keep a track where your liquidity is parked. Maybe you need to relocate it or not. So this is like a full-time job for someone who is doing this professionally. And if you're doing this unprofessionally, you're just not getting the best profits on top of your liquidity. So we have created an auto strats feature, which is automatically moving liquidity from one yield source to another one. Like detecting where your liquidity should be placed at this current time. So in the first stage, it works like this. So let's say there is a USDT DAI pool, and there is another USDT DAI pool for 25%. So the system will calculate whether it's reasonable or not to move it according to the market parameters like gas fees, pool saturations, amount of liquidity. And if the answer is yes, it will be moved. Then we sit and think like what we can do better here. Okay, like we're like moving liquidity. We can do some sort of internal swaps in some cases. So we do have pretty much the same idea here, but we do have USDT DAI and there is a USDC DAI for like with a better APY. So what we can do here, we can swap USDT to USDC. And again, we can move liquidity if it's reasonable to be done. And in general, we aim to create this system working not only within one protocol, within one blockchain, but on different blockchains. So for instance, your liquidity can travel from Polygon to, I don't know, Binance Smart Chain or Ethereum Mainnet, if it's reasonable to do from, APY maximization point of view. So in order to be more precise in digits, we have conducted some backtests of this automated strategy, this auto strats, and we've taken data from Beefy Finance. So this is like real market data for the last 6 months. And as you can see, if you just place your liquidity on Sushi, you'll get 7.4%. So this is like real market data. On QuickSwap, you'll be lucky enough to have 9.2%. On the Jet Swap, you'll be unlucky to have 2%. But Uno Autostrats will generate 11.6% because it will be like swapping from one yield source to another one, then here, then back there. And the idea, the more yield sources are connected to the system, the more deeper is this auto strategies are working and performing better. So this is highlighted very well here on Ethereum USDC pool. So Sushi or QuickSwap will generate just 22.5% here, but Una with a lot of swapping only within this 4 different yield sources will generate 55, meaning that like we were a little bit shocked when we get these results, but in general, this swapping of the liquidity can provide a lot of potential profit to you as a liquidity provider. So what kind of features we'll have in our ecosystem? We will aggregate all the best sources and we will think very widely about the aggregation. So for instance, we think to aggregate AMMs not from the DEXs itself, but from the bridges, from the, let's say, like places like Uniswap v3 with the concentrated liquidity. So we're thinking very widely about this. Also compounding, which we are doing better than the competitors because Roman have created the system, which is also keeping in track on like market data and doing the 3 compounds with the most optimal time interval. Again, maximizing the APY. A lot of nice statistics, insurance pool, autostrats feature that I've just presented, working on a cross-chain with a fiat gateway for the users and inheritance mechanism on top of this. So we do have our protocol running mostly on Polygon right now. It's live. We're providing an audit by the Sortic as we speak. So you can go and check for yourself, try the protocol. Maybe I will give it a try a little bit. So this is how it looks like. We do have some very tiny initial TVL, and we're increasing this right now. So we do have quite simple user interface. So you don't need to mess up with the LP tokens or doing like any other manipulations. Just deposit and withdraw your liquidity automatically without any delays. We do have a nice statistics around the protocol, around your liquidity, what is going on, so you can get a better understanding on this. And of course, we deployed recently our autostrats features, which is like moving liquidity and giving us the best unique value proposition here on the market. So coming back here to the presentation, in terms of marketing, we do have a lot of very nice and interesting ideas, such as vampire airdrops, such as NFT giveaways on like Project Galaxies, a lot of AMS sessions, like standard package. Plus, we are going to build like a network of the business developers who will help us to grow onto B2B side. In terms of token utility, we have a tier system with all of these nice features will be gained by the staking of the token. There will be big governance for the big governance function as well, because the DAO will be in charge for all major decisions and will be in charge for the majority, like 40% of all the token allocation. There is an affiliate system with the referral payments in tokens, fiat gateway, off-ramp and on-ramp, off-ramp discounts with the token, the white label solution with the subscription payment in token, some mutual pool listings with other protocols, and customizable autostrats for the common users. In terms of like TVL attraction, we are talking with a lot of crypto entities and start our first integration. So we're now talking integrating with 2 neobanks. One of them was Brightly, another is Banksy.com. So this will be our first integration cases. And also we're talking with other entities, and I hope there will be more coming soon. So in terms of token circulation and like a fee model, we are collecting 4% performance fee in the beginning because we want to outperform our competitors. But all of these numbers, digits, and distribution will be governed and like distributed by the DAO. In terms of the rounds, in total, we are collecting like 3 million for all ecosystem. Now we are covering the seed round. There is a private round, the biggest one, which we start to cover up as well. Tiny round for key opinion leaders, and the public round for I guess more marketing purposes as well. So on the seed round, we do have 100K allocation left. In if you want, you can talk with the Afford.Capital to get this allocation to you. So this is like what we have been doing from the investment schedule point of view. We do have a lot of partners and backers, and like we're talking to a lot of different access to a lot of different paths in terms of a public sale. We do have a lot of nice partnerships with the Chainlink, with the Cointelegraph, which will be providing us 1-year coverage from a marketing point of view. We do have created several like grants from different blockchains, from Polygon, and we're part of the accelerator program from Aurora, from Everscale, from Moonbeam, and talking with a lot of different chains and other crypto entities. In terms of vesting schedule, so there will 20% allocated for the investors. There will be 5% allocated TG for the seed and private, around 4 or 5 months cliff, and then 15 to 18 months linear daily unlock. So for the team and development, we'll have a lockup for 1 year, and then we'll have a linear release for 30 months. And as I've mentioned before, so the majority of the tokens, like around 40%, will be allocated and distributed by the DAO. This is like our major central idea over here. In terms of our roadmap, so we are here, we have created like aggregation, auto-compounding, like personal analytics, released the protocol, and so created this auto-strats feature, fair reward distribution, and now we're starting our cross-chain journey and doing our first B2B integrations. So guys, I guess this is it. Thank you for having me here. If you do have any kind of questions, feel free to ask.
Thanks a lot for the presentation, Alex. Guys, feel free to ask your questions. Don't be shy.
A quick question: those launch pads are already approved or no? The bulk starter one, for example.
Yeah, so we have been talking to the guys we will be approving let's say the list of the pads and the list of the taxes like in some time in the future, because you know, it's not reasonable to do this right now, and we need to figure out like the best strategy with our market maker, how to make TG on which taxes. For instance, so now in the middle of communication with all of these companies that you've seen on this slide.
Yeah, bulk starter takes a lot of time, just for you to know. Good luck.
Yeah, you know, it's a matter of like for one side, we want to distribute this allocation for as much paths, as much you know, I don't know, sources as we can in order to attract different like audience. From the other point of view, it's very hard to orchestrate all of this. So like I'll be honest here with you, like we're thinking about the best public strategy right now. So we're talking to a lot of guys, and they're quite interested. They're willing to take our allocations, but we didn't decide how exactly it will be done. So I guess this is a question for our like 1 or 2 months up ahead to create this kind of strategy.
Got it. Thank you, Alex.
All right, guys, if there's no more questions, we'll proceed to our last.
Actually, I have a question. Yeah.
Okay, go ahead.
Hi, Alex. So thank you so much for this marvelous presentation. So I have just one question to you. Your revenue stream is heavily depends on the performance fee, which is of course a part of API. So you need to increase your TVL as much as possible in order to, you know, get more revenue. So how do you plan to onboard new customers? Well, taking into consideration the crypto winter that we are currently experiencing. I mean, the retail customers that are, you know, tend to stick to stable coins right now, and they just try to stay away from those risky API strategies that you're offering to them. So they plan to, you know, to stick to stable coins right now. So how do you tackle this problem? How do you plan to onboard these customers?
Yeah, this is a great question. Thank you. So technically speaking, we want to work on two sides of this problem over here. So I mean, like there is a retail customers with the retail TVL, and maybe it will be hard to, you know, to work with them right now because they're like too scared or something like this. But it will be much more easier to attract the TVL from the businesses, because, you know, there is some entities which like they either possess liquidity or their users possess liquidity, and they can create some sort of a yield tab inside, and like we'll be doing this, let's say, white label solution, and this will be like, you know, win-win-win situation. So because the users will get the best yields, the protocol, like the businesses with whom we're having these interactions will have some profit, and we'll be splitting the shares. So this is like one of the models how we see the majority of TVL attractions. You're like absolutely right here. We need to attract as much TVL as we can. This is like the main idea for all yield generation protocols, right? So if you will take a look at the majority of charts of the our competitors, you can see that this TVL is actually going from the not from the retail customers, but from the businesses itself, because it's getting the swipes of like in 10 or 20 or $500 million per day. It cannot come from a retail segment, right? So the idea is that we see a lot of potential in TVL attraction from the B2B perspective. That's why we want to create a network of the business developers, and we're doing this right now as we speak. And in terms of the assets, this is the second part of your question. Yeah, of course, the majority of crypto and DeFi enthusiasts like sitting around the stable coins, and like actually I'm one of those guys. I'm sitting on stable coins. But in any case, you can use auto-stress, because we do have a special auto-stress, which are for instance like this. This is an auto-stress which is performing 7.3% now at this current market with the low volatility, and you can just sit inside this stable coins if you're allowing this stable coins to be swapped between each other, and you'll be getting, in any case, the best APY on top of the stable coins. No matter what happens, the system will put your liquidity to the best yield source, and you'll be getting the greatest APY in the stable coins via this particular auto-strats. So meaning that in any case, there will be some assets on which you'll be gaining some profit, because nowadays on this bearish side of the market, yeah, there will be more liquidity locked in the stable coins, and I agree with this. But later on, when there will be some bullish momentums on the market, this liquidity proposal, I guess, will start to be less in the stable coins and more in the other crypto assets. So does it make any sense?
Yeah, got it. That rings the bell, I suppose. Yeah.
Okay, thanks.
Guys, any questions? Thanks a lot, Alex, for the presentation. And
thank you guys for having me here.
Awesome. And let's move on to our dear friend Faraj from Dubai. He will present a project called Eywa. Many of you have seen or heard this before. They're quite big and reputable for the past few months already, and have raised quite a bit. So Faraj, pleasure away, and it's good to see you again.
Yeah, nice to see you guys.
Mm-hmm.
So yeah, I know quite a lot of guys from this chat, so hi to everyone who I know. So and thanks again, Sergei, for calling us to this pitch session. That's really important to have such events, and again, Afford.Capital is a great VC that supports great projects, and like looks in a longer time frame that most of the VC do. So yeah, let me start with giving you a little bit of background about myself. I come from a VC background. I'm having a small VC myself. I'm also having a large crypto executives community, and I've came across the Eywa project like maybe around 7-8 months ago. I was helping them in the process, and then once I've kind of realized the potential, I've joined them as a co-founder and CBDO, and I really believe that this project can change the entire cross-chain industry of the crypto space. And yeah, so let me start. As you probably know, there are quite a lot of problems in the DeFi space, and those problems, they affect everyone, like starting from projects, users, LPs, traders. And for the projects, it's especially affect those that are multi-chain or plan to become multi-chain. On the left, you can see the current DeFi paradigm. The projects have to build the dApps on each chain, and then have to split and maintain their liquidity among multiple pools, experiencing high slippages, impermanent losses, high token volatility, maintenance costs. The projects have to rely on multiple, usually centralized bridges that increase the security risks, have higher risks of hacks. Both developers and users are required to have manual interactions, lots of manual interactions with multiple platforms, lots of clicks, and currently there is no automation present. On top of that, there is lack of universal liquid cross-chain assets, and the projects experience difficulties in becoming cross-chain, as well as experience high cost of user onboarding due to isolated blockchain communities. Overall, the user experience is poor, and there is no ultimate user simplicity. We believe that there is a solution for that, and it's only if we change the current DeFi paradigm. So so here is the future with Eywa, where developers create a single dApp in the blockchain of their choice and a single liquidity pool, and have access to all the user base and all the liquidity from all the connected chains. All interactions are happening in the single Web3 dApp interface. Our vision is that future of DeFi is cross-chain, and the bridging is decentralized. Just look on the picture. Through one quick integration, we make the project cross-chain with decentralized bridging. And with Eywa cross-chain liquidity protocol consisting of AMM DEX, token bridge, liquidity aggregator, and liquidity assets hub, we create an ultimate all-in-one liquidity solution. Eywa cross-chain data protocol is a solution that creates a borderless environment for everyone in the crypto space and brings ultimate simplicity for the users and increase their adoption rate. This is the heart of our solution. And you can see on the screen the 7 largest by TVL EVM chains. Usually they used to be more than 1 billion each. Now the smallest one is around 500 million in TVL. And all of those, they contain assets like stable coins, Ethereum, RAT, BTC, etc. So by locking and unlocking those assets, mint and burn mechanism, the derivatives, which we call S tokens, are created. And these S tokens are one-to-one backed with original assets. Utilizing Curve Metapool technology, if you remember the curve, in the curve, 3 CRV token is equal to 1 DAI, 1 USDT, or 1 USDC. The derivatives are created and then aggregated into E tokens. So those E tokens like EUSDC or eDAI are LP tokens of the curve pools filled with those S tokens, synthetic assets from all connected chains. For example, an EUSDC can be moved freely between any chains. And it also can be converted on the fly to any other E stablecoin like eDAI through the EUSD exchange stablecoin. Technically, EUSD is an LP token of the curve pool with other E stables and becomes a universal stablecoin. First, we will start with most commonly used base stablecoins, USDT, USDC DAI, and BUSD. And later we will add the wrapped Bitcoin, the Ethereum pools, and we'll create Ethereum and eBTC. We basically will make them universally acceptable liquid cross-chain assets. Ultimately, we can create any other tokens, for example, eDoge, eLink, etc. And our vision that in few years' time, there will be no isolated tokens in some chains, and assets will be moving freely between blockchains. So let me dive a little bit deeper into some of the use cases of the protocol. The first use case is an example of simple cross-chain trade, where the trader from BNB chain places an order to buy an X token in Polygon chain and then bridge it to, let's say, an Avalanche. The BUSD is locked in BNB chain, and then through lock and mint of the synth on Aurora hub chain, and then burn and lock mechanism in the USDC in the Polygon is unlocked, and then token X is purchased. And then it's bridged into Avalanche, or it can be bridged into any other selected chain. All this happens in one transaction, and most importantly, in the gasless mode. So meaning that the fees can be paid from the body of the transaction, and user doesn't need to have BNB or Matic or Aurora to perform this transaction. That simplifies the process for the users from any wallet without need of any other tokens can buy the token X or any other token. Fees can be also paid in Eywa, which is one of the token utilities, or it can be paid from the source chain token, in this case BNB. The token bridge, as you can see on this slide, will be available as a separate service for the projects that want their token to be present in all connected chains. Let's explore another use case, which is our one of the killer features, really. So another use case is the unified cross-chain pool with additional yield farming. And if you remember, I mentioned the problem of fragmented liquidity, where the project is splitting their liquidity between the multiple chains. Instead, we create a single pool of liquidity with EUSDC, for example, against their token in the chain of their choice. And this way, that problem goes away. They create an instant access to the liquidity and user base of all connected chains without the need to create their own smart contracts in each chain. But the killer feature is that the project will also be compensated for that in the form of additional yield farming in Eywa token, as technically they add liquidity to our protocol. Eywa DEX is located in Aurora hub chain, which will fetch TVL data from EUSDC pool and calculate and distribute the Eywa rewards to the project. Important to note that other blockchain users can buy the token from the Eywa DEX utilizing other stable coins as well, which will be converted on the fly into EUSDC. We call it a cross-chain listing of the token, and we expect it to be a very popular feature in our protocol and will be a nice additional source of liquidity. And that's not all. The next use case is an example of liquidity aggregation, where they're utilizing our cross-chain DEX functionality, curve pools and Uniswap V2 pools, the partnership with external DEXs. For example, in our case, we have partnership integration with 1inch. We can facilitate the swap of any token to any token and do it more efficiently than our competitors. This means that with lower liquidity, we can get higher trade volume. The difference between us and other cross-chain aggregators is that we have our own stable swap, which is more efficient. And for the security, we have decentralized bridging. I'll touch on that later in comparison slides, but we have also in our roadmap the anti-front run attack to prevent to make our protocol even better against the bad actors. Advantages: we respect the project preferences on the stablecoin choice, keeping the ability of on-the-fly swaps with other universal stablecoins. And if the project wants to isolate their depegging risks, they can do that. Trade-wise, we allow for any stable swap to any other stable swap and any token to any token swap. I already touched on our unique proposition of additional yield farming project own liquidity. Cost-wise, we cut a lot of liquidity management costs for the projects. They don't need to market make on multiple pools or arbitrage those pools. More liquidity in the single pool leads to less slippage, lower impermanent loss, lower token volatility. And we create a universal stable coins and other universal liquid assets like BTC or ETH or EUSDC that are so needed in the DeFi space. And we also offer a quick way for projects to scale up by connecting to the user base and liquidity of all connected chains, and also creating a ultimate simplicity for their users to buy the token or even to use the token. So token utility-wise, we are having, it will be provided for the yield farming. It will be used in the governance of the protocol. It will be used as proof of stake. And for example, just imagine that 50% or more of the supply will be locked in the protocol for the security reasons, similar to Cosmos or Polkadot. It also will be used for the boosting of the efficiency of the protocol or liquidity providers, similar to how it's done in the curve due to DAO voting power. It also will be used for the payments and discounts as the payments can be done in Eywa tokens. So this is the team. It consists of 33 highly experienced professionals, 23 skilled blockchain developers working internationally. CEO is mathematician and architect of our protocol. He hosted more than 300 nodes in the past and knows all the little technicality of other chains. He and our chief strategy officer, Alexander, are co-founders of DeFi Asset Management Fund and advisors to many projects. CTO is 20 years in software development with experience in big data, machine learning, blockchain tech. CMO is 15 years in marketing, X1inch, and Sex.io. I already talked about myself that I come from VC background and have a Harvard Business School executive education. The team got 6 grants from layer ones, such as Near, Harmony, Algorand, Aurora, etc. We won prize places in 3 hackathons, and on the right you can see the list of our backers, which include Big Brain Holdings, Maple Block VC, Milano Capital, G1 Ventures, etc. Traction-wise, we have completed the alpha testing with 53,000 testers. They have hit the whitelist on NFT. The NFT drop has been performed on an endemic marketplace in Aurora. At the moment, it's like 30,000 people have claimed the NFT, and it's traded #1 on Tofu NFT marketplace. And again, this is just a prize NFT for the testers. Our cross-chain data protocol is already working in proof of authority mode, supporting 9 chains. Our cross-chain DEX is currently tested, and I can show you the test demo right in a few moments. And we also have signed a strategic partnership with Aurora, entering Aurora in Near ecosystem. The CEO of Aurora is invested in us and is currently making an interest to tier 1 funds. We have also a strategic partnership with XDAO, which is a multi-chain DAO builder, and after integration of our solution, it will become cross-chain. This is our history and the roadmap. We have developed this project for 2 years, and we're very close to the finish line of getting the project launched on the mainnet. We will launch it on 8 chains in the end of September, beginning of October. And immediately after that, we will start the cross-chain listing for the projects. After a month of solid traction and TVL growth, we will perform the TGE and IDO. During all this time, the role deposit consensus of data protocol will be tested, and during the winter, we're planning to have a public sale for validators and launch the data protocol in role deposit mode, starting with 200 to 300 nodes. This is the comparison to our closest competitors. As you can see, all of them are high TVL projects like Stargate, Synapse, which are AMM DEXs, and also Multichain, which is 1-to-1 liquidity bridge. Apart from being more efficient and providing more stable coins and also having unique features such as paying fees from the body of the transaction, creating unified liquidity pool, farming with project-owned liquidity, we have also additionally big decentralization, apart from Tor chain, which is decentralized with maximum of 100 nodes, however very ineffective. Other solutions are poorly centralized, and they are like in proof of authority or having centralized solutions and relying on Chainlink oracles. And you wouldn't really want to have few or even one oracle from Chainlink to confirm that 500 million of the transaction have happened, and that you can release the liquidity from your protocol. That's what Layer 0 and Stargate doing. They rely on Chainlink big time. And in multi-chain, you rely on the fact that 13 out of 24 nodes are not compromised, or else you could lose $2 billion of the TVL. So to achieve the same volume as multi-chain, we need an order of magnitude less TVL due to efficiency of AMM DEX. But however, we try to achieve the same kind of slippage that occurs in one-to-one bridge. And comparing us to Stargate, we can achieve 2 to 3 times lower slippages and hence having a higher efficiency. But that's not all. Let's not forget about cross-chain data protocol, which might become the true game changer in the cross-chain industry. Our decentralized Oracle network, starting with 200 to 300 nodes and up to 1,000 nodes, will ensure the protocol security. The Ronin bridge hack, which has happened, where 5 out of 9 nodes were compromised and resulted in $600 million loss, would just not happen here. The role deposit is a battle-tested consensus similar to Super Oracles or Algorand. And process-wise, we have smart contracts and bridges in all chains and our own Oracle network with nodes listening to all the blockchains and then recording and validating the cross-chain transactions. The off-chain Eywa pusher will ensure that validation has taken place and deliver the transaction to the target chain. Comparing us to our competition, you can see that there are not a lot of truly decentralized competitors. Our closest competitor is Axelar, with currently 44 nodes, and maximum number of nodes is 100 due to tender mint limitations. Other competitors are even less decentralized. For example, multi-chain has only 24 nodes. Layer 0 have a high reliance on the Chainlink oracles, which are centralized. We also have significantly progressed on non-EVM chains, such as Solana. We will add Solana, Near, and Algorand later on as well. So this is the tokenomics. We are now in round 2 with 4 million round at 6 out of 6.5 total. We have raised 2.5 million, and currently the private round 2 is available at 60 million valuation. IDO is at 100 million valuation, but most importantly, the market cap is very low. It's only 600K. And within the 6 months from the launch, we expect to launch this decentralized data protocol and lock major part of vested tokens into it, which will reduce the supply pressure. This is an investment deal. We have SAFT and round 2 at valuation of 60 million. So the schedule is that 10% is unlocked 6 months after TD, and 90% is unlocked linearly within a year. For the investors, the good deal is that the vested tokens can be staked straight away in the security protocol once the role deposit consensus is launched. Obviously, for the efficiency of the protocol and proper launch will require some liquidity provision. So there are some ongoing deals going for the LP providers, and the initial providers of liquidity will be eligible for early contributor rewards later on. The yield farming will be launched after IDO, so the liquidity providers will be earning even more than that. So thanks a lot for your time. I think that we invite you to all to become part of Eywa. I'll take just a few moments of your time. I think that it will be interesting for you to see that we actually have a demo ready, and we have connected number of chains in the test nets. So that's how it looks, the overall. So the UX UI of the product. These are 5 chains that are currently connected in the test nets. It's Avalanche, Polygon, BNB, Harmony, and Rinky. So let's select, for example, DAI from Avalanche, and let's exchange it to USDC in Polygon, or in the Ethereum chain testnet. So you can see that it's 0.1% the slippage, very small slippage ongoing. So we will sign our transaction in the MetaMask and perform the swap. So once the swap is ongoing, I'll sign the swap transaction, and it's in the progress. So you can see here that the transaction is ongoing at the moment. I'll show you that how it is done. It was done in the past, and this is basically how the USDT was exchanged from the Harmony into the DAI in the BSC. So you can we can go into the Explorer, and we can see that in Harmony this transaction has happened, like 10,000 USDT was exchanged. Then would go into the Polygon and see that 10,000 of USDT was locked in the Harmony. In the Polygon, which currently is our hub chain for the stability reasons, the 10,000 SUSDC, which is basically it's a derivative token, is created. Then SUSDT, EUSDT, which is an LP token, is created. After that, it's exchanged to EDAI in the LP EUSD exchange pool, and then SDAI, which is in BSC, is created by adding the EDAI LP token, and the derivative is created after. So, and then that particular DAI BSC is then delivered into the BNB chain. So right here, so 9,990 DAI was received in BNB, and it's all test networks. So another example of that is, for example, basically the first operation is already done. The DAI was locked, and then the swap is ongoing in our solution. Another thing that I will show you, that what I've shown in the first case scenario, where when we from USDT in Avalanche, we buy the token straight away, and we deliver it to for example in the Rinky in Ethereum. So, and the token X is actually having a single pool of liquidity in BNB chain. So that's where the exchange is happening. So I'll walk you through the SUSDT. The USDT is locked in Avalanche, and then synth is created. Then that synth is exchanged to the synth in BSC, which is BNB chain. In the BNB chain, the USDT is created to be changed to token X, and then token X is then bridged into the Ethereum. So this is BNB chain, and this was an Ethereum chain, and this is the proofs of the transaction that 927 token X was delivered. And obviously this one is that we have a BNB chain, Polygon chain, etc. This is Harmony. But apart from that, it's just not only testnet, it's mainnet that we have integrated as well for the bridge. So this is the mainnet. I'll connect my MetaMask here. And from Harmony, I can bridge the token, which is 3.7 now, into Polygon. And it will be done in the mainnet of the both Polygon, Harmony, and we also have BNB chain there. So that's just to tell you that our developers are already very close to the mainnet launch. So everything is on the bridge side is working, and that's basically, you can see that how it started being done a few seconds ago. The deposit in Eywa portal, which is in Harmony, is already done. So I can show you that this is a Harmony. This is already in the mainnet. So one Eywa is done. This is the gas fee, and it's already transacted. So I have successfully delivered one Eywa to Polygon, and this is a mainnet of Polygon scan. To see the difference, this is mainnet Mumbai, which is a testnet transaction, and here it's a mainnet. So one Eywa was delivered and bridged. So, and it used to be 2.7, 3.7. Now it's 2.7. So that's basically it. If you have any questions, let me know.
I have a question. Thanks. Looks like a super cool product, but I already use Cashflow. It looks exactly the same, to be honest.
Yeah, I'll explain. So there are a lot of products on the market that are utilizing some of the competitors' chains, for example, multi-chain, and they're just building the apps on top. Yeah, they having like better maybe UX, and what we are offering is lower slippages. We're offering the unique opportunities for the projects to list their token and get access to all chains. So our solution is mostly BNB, B2B, because that's very efficient for the projects to become cross-chain. For you to move your tokens, that's good if until your bridge is hacked. Yeah. So when you're utilizing,
I believe Cashflow is not a bridge. I'm not like a blockchain developer, but I believe it's not a bridge.
Any router will be utilizing bridges. Any router, especially those that are on the smaller side. There are like Ocean Protocol, Swim.io, etc., etc. The big guys which have their own bridges, for example, multi-chain, they have their own bridge. It's one-to-one bridge, though it's not AMM DEX. Or you can utilize Stargate. They're relying on their own infrastructure. So when you basically are going to any other website that is saying, oh, our partners are this, our partners are that, or Rubik, for example, we're working with Rubik to as DEX aggregator, and you will be getting like, oh, it just costs me like 0.5%. Oh, so cheap for me to move all my funds. But actually, the Rubik will get 0.3%. We will be getting 0.1% on the stablecoin swap, and maybe someone else will be getting some other 0. something percent. So our DEX will always be cheaper anyway, because this is our technology, this is our roads. When you will be utilizing someone else, you will be paying more. Better UX UI maybe, but never better slippage or never better experience. And this is one. Second one, it's every time, again, the multi-chain will provide you probably the best possible rate because it's one-to-one. It's not AMM. It's not a pool of liquidity which can be imbalanced, etc. However, you rely that it's very centralized solution. It's only 24 nodes, and if you go into the website of multi-chain, I can do it now. You can see the sum of the nodes called Ahmed with Smile, and this is $2 billion project. So amount of the security, it's still not up to a standard. In the last 2 years, around $2 billion were stolen from the bridges. So we are addressing this problem by having decentralized solution. There is a reason why Ethereum is way higher in TVL than anyone else. And this is because it's decentralized. It has lots of nodes, very decentralized, and people trust that. Will it happen after merge? I don't know. But we are starting with 200 nodes. It will go up to 1,000 nodes in the future. And that's what you want to protect your transfer. If you send $1,000 or $100, you don't care really. But there are people that are moving huge amounts, like millions and tens of millions of dollars in between chains every day, based on the arbitrage or based on some other, like for example, Unofarm can do it as well for finding the best rates for their stable coin yields. So they will also require some cross-chain bridges. And why not to use the centralized one? And why not to use the one that was developed by the best blockchain developers? We are working with Aurora. Aurora CEO is personally invested. We are working with their technical team on all the improvements in our protocol. The Rainbow Bridge hack that has happened, and which is controlled by Aurora team, by the way, it resulted in 5 Ethereum being locked from the attacker's wallet. And this is compared to Nomad Bridge and Harmony Bridge that happened like 1 month ago and 2 months ago, resulting in $100 million loss on the protocol level. So it's all about the quality of the contract. It's all about how many audits you're doing, and also all about decentralization. So that's our solution. Again, probably the product that you're using, we will be approaching it and provide our back end for them to use. And maybe they will be using our routing in the future. You'll be completely happy with their product, and maybe it will be decentralized going forward.
Got it. Thank you.
Cool. Thanks, guys. Any more questions for Faraj and Eywa team? Don't be shy. Yeah, we're good.
Yeah, I know it's very complicated thing. You know, a lot of VCs from the top VCs couldn't understand the technology, so maybe it was too technical for you guys. But it's good to learn that this technology exists.
I know what you're talking about,
so
man. DeFi is a very complicated issue.
Yeah.
Well, I'm glad that we guys have teams like yours that are trying to fight the CeFi and trying to fight the fact that people are not getting much ROI on their savings. So DeFi is definitely trying to change that. So
absolutely.
Yeah, guys, if there's no more questions, I would love to thank everyone, and also make sure you check the chat, because we have sent. I know it's mainly investors here, but we do imagine that there could be some startups. So that just kind of came to watch and learn, the guys who have lots of experience speak. So for the startups who've joined, we have a startup guide. It's sort of our culinary and gold standard pitch deck recipe. So you feel free to take a look at that for those guys who are still trying to build projects and shape it in a way that's presentable to VCs and angels. For investors, we have included a scoring system for blockchain startups. So there's also a link in our chat. Check it out. And also a great way for us to stay in touch is to join our Telegram channel. So it's simply Afford.Capital. I also shared the link. And yeah, feel free to connect to us at any moment of time. We can always set up calls with the projects which have spoken today, discuss DeFi issues or music right, copyright. And also we'll keep you updated on all the upcoming pitch days. So we plan to do those about a couple of times a month. So if you guys enjoyed, give us a little shout out and we'll definitely do it again. So 3 to 4 projects per time. I think the 2-hour presentation is enough. No one is sleeping. That was perfect. A bit shorter than last time. So guys, final question. Does anyone have anything to discuss? And if not, I would thank everyone, Afford.Capital team and the teams that had time to join us today, all the investors and all the guests. And would love to see you again next time. We'll keep you updated. Friends, guys, Sergei, anyone has to say something else?
Thank you. Yeah, I would like to say that today is an amazing day. And if you guys have a question or you have some opportunity to receive the documents or something, you can leave the request belong to the link in the chat. So just leave your request and we will contact you and send you all kinds of information that you request in. And thank you very much today for the best pitch day, for the first pitch day ever. Love you, hug you, and see you soon. Bye. Thank you.